Saudi Arabia's May leaderboard is not just one trade. From digital government services to utilities, hospitality, food, energy, insurance, retail, and even the exchange operator itself, the top 10 Tadawul names climb between about 4% and 17% in May 2026. Hello everyone, and welcome back to the channel. We are continuing our global market series with the Saudi market, counting down the 10 strongest Tadawul stocks in this latest May window, plus one sharp drop on the other side of the board. This is a useful mix because the winners are not all telling the same story. Kicking off the list at number 10 is Saudi Tadawul Group, up about 4%. The exchange operator's first quarter profit fell to 56 million, down 54%, as operating expenses rose to 255 million. Even so, the stock still made the top 10, helped by market attention on the exchange's long-term growth plans. At number 9, Jarir Marketing gained about 5%. Jarir's latest quarterly profit rose 17% to 254 million, while revenue climbed 14%. The key driver was stronger sales across departments, mainly smartphones, which gave the bookstore and electronics retailer a solid consumer demand story going into May. Number 8 is Tawuniya, up about 6%. The insurer reported first quarter net income of 287 million, up 10%, with gross written premiums rising 15% to 8 billion. Argam linked the improvement to a stronger investment portfolio and efforts to collect outstanding receivables. Number 7 is Petro Rabigh, up about 8%. The refiner and petrochemical producer swung to a first quarter profit of 1 billion after a loss a year earlier. The company pointed to stronger refined product pricing, higher sales volumes, improved plant reliability, and lower financial charges. Number 6 is Aqua Power, up about 10%. Aqua's first quarter net profit reached 345 million, below last year's unusually strong quarter, but the growth story stayed large. Assets under management rose to 455 billion, and the portfolio reached 109 assets across operation, development and construction. Number 5 is Almarai, up about 11%. The food and dairy group delivered 732 million in first quarter profit and 6 billion in revenue. Mubasher said revenue improved on stronger Ramadan performance and broad sales volume growth, led by dairy and poultry. Number 4 is Makkah Construction and Development, up about 12%. The company earned 162 million in first quarter profit, up 8%, while net sales rose 7% to 251 million. The lift came from commercial mall revenue plus hotels and towers benefiting from Ramadan. Number 3 is Kingdom Holding, up about 13%. Investors had a shareholder meeting catalyst on the calendar, with a May 11th vote tied to 1 billion in cash dividends, equal to 28 halalas per share, and a 255 million stake in Breakthrough Energy Ventures. Number 2 is Marafiq, up about 15%. The power and water utility reported first quarter profit of 127 million, up 8%, and revenue of 2 billion, up 7%. The company said results were supported by higher revenues and lower finance charges, partly offset by higher fuel costs. And the number 1 performing Tadawul stock in this window is Elm, up about 17%. Elm's first quarter net profit reached 656 million, up 33%, while revenue rose 32% to 2 billion. The digital services company also recorded 59 million in non-recurring gains, tied to remeasuring a previously held associate stake. And on the other side of the leaderboard, electrical industries fell about 14%. The strange part is that its latest filing was strong. Revenue rose 31% and net profit rose 55%. That makes this a useful reminder that a good earnings headline does not always protect a stock from profit-taking. So this Tadawul episode is a mix of genuine earnings strength, dividend attention, Ramadan-linked demand, and a few moves where the market looked beyond a simple profit number. That is what makes a broad market countdown so helpful. It separates the headline movers from the actual business drivers. If you enjoyed this countdown, please like, subscribe, and tell us in the comments which Saudi stock story looks most durable to you. Thanks for watching, and see you in the next video.